So what is the total amount of wealth you would be managing?
Close to 45,000 crores.
Got it. What are some things you've learned from Mr. Harshad Mehta?
Ashwin Bhai and I kind of became a hunting pair together.
1992 scam had happened.
I became jobless. I was without work for almost 9-10 months because markets were collapsing.
How many books you would have read?
More than 5 digit for
More than 5 digits?
Yeah.
My gosh, more than 10,000.
Yes, without doubt.
Election season which is also happening. Do you think this is the right time to invest in the stock markets? Hi everyone, welcome to Conversation with Kushal once again. If you are someone who wants to know more about investing and if you're someone who wants to know more about public markets and equity, this is going to be the perfect episode for all of you. We have the legend of the investing world, Mr. Bharat Shah, who's the Executive Director at ASK Group. Thank you so much, sir, for sparing your time here. It's an absolute honor to host you on this episode today.
Yes, sir, and thank you.
So what is the total amount of wealth you would be managing at Ask Investment Managers?
Total amount of assets at ASK Group would be closer to 95,000.
95,000 crores.
Yeah, 95,000 crores. And
Wow.
At ASK IM, the investment managers, that would add up to close to 45,000 crores.
Got it. Let's also delve deeper into the investing world and even your work experience, the real life which began after the world of academia. I was just doing like some research and got to know that you were working at Birla Mutual Fund, then you worked at Apple Finance, you've also worked at Gromor, you've worked at Asian Paints, etc. In Gromor specifically, like you were working closely with like Mr. Harshad Mehta, or like how was that experience?
Yeah. Both with Mr. Harshad Mehta and Ashwin Bhai. So Harshad Bhai and Ashwin Bhai, both I work very, very closely on the investment related, research related, and generally offer my inputs about particular businesses or stocks. They also had debt market investing, in which I was not really involved, but my entire involvement was on the research side. I was actually appointed as the head of research. That also is a bit of an interesting kind of a turn in the life. My heart was in investing right from college days. So I used to at whim just take up, study the annual reports. That continued even while doing my CA, ICWA, MBA, all through. I kept reading books on investment, literature on investment. I had built a massive library of annual reports at my home where I could pick up any report and could study. My heart was very clearly in investing. But my first 4-5 years of career, some 38, 39 years of career so far, were actually into non-investment activity. It had nothing to do with investments. They were more into regular finance and finance-related jobs. Just to remind you, that was in 80s. And there were no foreign institution investments. Markets were charitably regarded as gambler's den and wild west kind of environment in a general sense, and it was not a career option because neither you would particularly get paid well, nor did the people who seek to hire you had any mindset to really look for professionals. And therefore I was having a huge dilemma. The environment was not conducive. Here I already was a married man with a child immediately 1 year later. So my family got completed very soon. As soon as I finished my education, in 2 years' time, I was not just a married man but also a father. And therefore financial responsibilities were very important. and I couldn't have looked aside. On the other hand, career was not to be had in investing with any meaningful environment, any meaningful opportunity, and with any meaningful compensation. So it was a huge dilemma. My heart was in investing, but it was not easy to find career in that field. And while I did well in my non-investing initial 4 5 year career in finance work, but my heart wasn't in it. It is not, I was doing well. I rose well in that time in the organization quite well. But it was something that I did, not that I enjoyed it particularly. My heart was still in investing. One day on Lark, I just felt that maybe I should apply, because at that time, at least Gromoro was known to be an ambitious firm looking at doing things, and whatever I learned that time, that they were doing exceedingly well in their activity. So I thought, here is a place maybe I am likely to have a chance. So I just wrote a letter to them, to the brothers, saying, giving my background, saying that I don't have any formal qualifications. In a sense, I don't have any experience in the investing. But informally, I believe I have a fair bit of experience. You may want to test and check me out. But I also have a need to be spelled out initially, that I am not going to work at a rookie level, at some junior position. Here I have done 3 academics, and I already am 5 years into my full-fledged work in finance, where I am regarded well and I am doing well. So while my heart is in investing, but I want a reasonably respectable position, not some right at the end of the ladder with where I could become a victim of disregard of the system, and not make any meaningful chance of protecting my financial interests. So later reached them. A few days later, surprisingly, I got a call. I think it was some 10:30 in the morning. The discussion went on till about 6 in the evening. They were kind enough to offer me lunch in between. And the 2 brothers, I think, really grilled me as much as I can remember.
Do you remember what kind of questions they asked and all?
On all kinds of investing, global thing, Indian thing. What they asked me about some stocks as well, where I was formally not in investment, but they wanted to check and understand philosophy, ideas, investing methodology, whether I really had merits in the claims that I was making, or I was a pure rookie. They wanted to make a full judgment on that. Finally, I walked out of that office with the appointment letter in my hand. So that was remarkable, and as the head of the research. So I had, I think, 32 people research team at Gromor. And that speaks again fantastically about them at that time. Way back in 91 or 92, they had vision to build pure research team of 30 people in the investing. So that was a remarkable thing to think of, that somebody some 35 years back would have thought of building such an effort to build an institution. They had even more ambitious plans to build a much bigger team, and to even study globally, and to be able to participate at some stage in the global market. So clearly both the brothers were hugely ahead of time, with a great learning thrust and thirst, and enormous self-belief and ability to back up their thoughts with the real implementation of those ideas. So, remarkable place. In that short period I was at Gromore, maybe the learning was 5 times, 7 times, 8 times the length of time that I spent.
How many
I do
years
enjoy
you spent there?
about little over a year and quarter when all these
The
that
scam happened after that.
well, that's how people describe, but those troubles broke out at Gromor.
Hmm.
I became jobless. I was without work for almost 9-10 months because markets were collapsing. There was no little opportunity as it is, and who would employ me again as a very senior position in something meaningful? And many of them might have concerns whether I should be hired at all or not coming from Gromore. That got dispelled after 10 or 12 months, but for that length of time it prevailed because in general in the market also it was reasonably well known that I was kind of close to both the brothers. Very quickly my equation with both the brothers was very, very strong, and I thought they kind of took to me and I took to them enormously. So it was a mutual gratification club, and therefore uh, it took me a while before I could find anything even remotely meaningful or comparable. But that was the stage. I didn't have much money. I had responsibility of family, and the packages and pay scales at that time were in pittance. I mean, salaries would not add up to more than some 1 lakh, 10,000 per annum, not per month. Um, Most young people today at 1 lakh 10, 1 lakh 25 will not per month treat it as a respectable compensation. So it was there was an existential challenges also to deal with.
What are some things you've learned from Mr. Harshad Mehta, and how were the interactions during your one year 4 months period?
Great courage of conviction. I have not seen too many people with the courage of conviction that both the brothers had. Harshad Bhai had a very macro vision and terrific confidence about where things will go on a long term. And Ashwin Bhai, as a classic investor, would deep dive into every position, every stock in unbelievable details and with a huge amount of passion. So Ashwin Bhai and I kind of became a hunting pair together to go deep dive into many ideas. So obviously I had a lot to learn from Ashwin Bhai and benefited enormously from that. The techniques and the tools and the analytical points and the analytic intellect to be grasp, the kind of points to look at and kind of things to ignore and not pay attention to. Many things closely I work with Ashwin Bhai daily and learn from. With Harshad Bhai, not a daily introduction, but every 3-4 days, but a deep introduction whenever it will happen, and delving into many larger issues and longer term issues of the investing and building franchise. So both were significantly complementary perspectives of an unbelievable type. And here I was a rookie with, really speaking, a small cog in a giant wheel at that time. But I was never made to feel that way. In fact, I was made to feel very special by them, both the brothers, and I was kind of given regard and respect more than probably my place in the firm deserved. So it was their kindness and it was their magnanimity. From my side, it was an environment of learning machine. Here I was thrust with some 30 people reporting to me suddenly, and whom I had to lead and contribute to their efforts and their learning, for which I needed to have some credentials to show that I can have something to offer to them. On the other hand, from my environment, from Ashwin Bhai and Harshad Bhai and some other colleagues, I had something very important to absorb and grasp on a daily basis. Those were the days when I used to work every single day of the week. So all 6 days of the week I'll go to office, full days. Sunday used to be concessional, so I will return home by 6 o'clock, 6:30. But pretty much work half the day or 3/4 of a day, even on a Sunday. So that was of my own choice because I enjoyed it, I loved it, and I just kept doing it. So it was organization which was open-ended, and that gave me enormous scope for learning. I was fortunate to have two bosses who were phenomenal individuals of character, of capability, of class, and of vision. And I was thrust the responsibility of working along with a team, and to make them productive and to learn from them and to contribute to their learning. So I think it was a multifarious, rapid acceleration of learning.
Right. When I just mentioned that 1992 scam had happened, you mentioned that people call it scam. So why would you say so? Do you have like a differing viewpoint over there?
Of course, there were issues which happened basically on the fixed income market side, as we know, and the funds available from the fixed income markets, and then and now, are not permitted to be put into the equity markets. That is where the fundamental challenge or the issue lied of what was not right and what was definitely wrong. But they defaulted anybody with anybody. They did not pay anybody. I don't think so. I mean, they honored every obligation, everything that I know of. Not that I was aware of their fixed income business or activity at all, because I had nothing to do with it. But subsequent events also showed that they did not really sin against anything. Rather, they suffered in a huge way. And media and others may paint it in whatever way, but as an individual who worked there, and maybe my view is biased because I have a deep regard and respect for both the brothers. Some of the people may have a different view on that matter, but I will go by my view of what I thought of those individuals.
Right.
I have nothing but undiluted regard and respect for both the brothers, Harshad Bhai and Ashwin Bhai. And I feel aggrieved that outstanding investing talent that was represented by those two brothers, which would have contributed deeply to the investing firmament of this country itself. Unfortunately, two giant investing talents have been laid inactive, and India has suffered by not learning from those two individuals.
Right. One of the other persons who have also influenced your life is Mr. Charlie Munger, right? Like, I think you've also had some sort of interactions with him as well. So how were those interactions, and do you remember any lesson that you've learned from him?
Lots, I mean, with people like him or people like Buffett, there are lifetime of lessons to be learned, and no interaction or no amount of interactions is enough to fully wrap it up and fully complete. But obviously, you have an advantage of reading what they have said or what they have written, or you have an advantage of listening to what they have said in many fora and to absorb it. So, incredible lessons from both Mr. Buffett and Mr. Munger, two very, I would say, rather different individuals, his personalities. Probably Munger is, rather was, very direct and sharp. Mr. Buffett, to my mind, is little more diplomatic, and he makes his point, but in a way where it is very modulated and softened and achieves the purpose, but at the same time conveys something in a very elegant way. So Mr. Buffett is different, Munger was different, but both have incredible investing knowledge reservoir. It is, of late I've seen it as a fashion to kind of discredit some of the records, or to say that for this length of time they've done this much only and that much only. When I see this kind of critical comments, some of it well-meaning, without malice, but some others I suspect are ill-founded, shallow, and malicious, because both of those people are phenomenal examples. That is not to say they didn't make mistakes, or they may not have always acted exactly as what they've said. There have been areas where they've acted on things. Those are not easy to reconcile completely with what you thought or what you believed they would have done, or they would have thought about it the way they did. But those are minor and irrelevant points. Overall, both the individuals have contributed so much to the whole art and science of investing. The inner side, your character, your temperament, your discipline, your ability to deal with Mr. Market in with a right mindset without being consumed by Mr. Market and its machinations. Many of these lifetime lessons, I think both Mr. Buffett and Munger have taught to us. They may not have dealt as much with the technique of the stock picking, or even much less about how to go about valuing businesses and how to come out with a very cogent valuation model. That they typically, more often than not, left it in suggestive tidbits and nuggets here and there, but not as a kind of overarching sort of a structure like what Graham has done. So to that extent, they've dealt with more philosophical aspects of investing and dealing with the market, which are far more temperamental and psychological aspects. But these are very invaluable lessons to be learned. You need to know your stocks. You need to know how to figure out what will work and what will not work. You need to build it into a coherent portfolio where each name in itself may have a personality, but aggregate of them must represent a distinct personality too, and have an independent character of its own, as if the whole portfolio were to be a single stock. So all of those are vital. How to value those positions, how to review, how to change, and how to change without tearing apart anything or resulting in rupture. So all of these are important lessons to be learned. How to deal with the markets and not get consumed by its violence and volatility and machinations. How not to treat Mr. Market as adversary but Mr. Friend, and a truly gratifying friend if you really understand that in the short term a reprimand by market is actually a long term, forever, lifetime education. And to that extent, we must remain thankful to Mr. Market for any reprimands or sharp kind of knock on the knuckles, But in a short run, we deal with it more emotionally in terms of the pain suffered. But in the long term, it's a greatest education to be gained. And I think on many of these aspects, Buffett and Munger have taught well. how to remain disciplined yet agile, how not to get carried away by success, and at the same time not to take any failure too much to heart where you lose your self-belief. How how to understand the yin and yang of the investing, that there is and there is not. It is, but it is not. That you trust something, but you doubt at the same time. That you believe, yet you have concerns. That you have faith about, but you also have skepticism about. I think building that yin and yang mindset, and not to get too much carried away by the numbers and the quantitative part, and while keeping them at the center of what you do, without losing sight of them, but at the same time pay huge attention to the qualitative aspects, which probably are not only as important, but in my opinion even more important than the quantitative part. Quantitative part may be a bit more like science, qualitative part may be a bit more like art, and investing is both science and art, but in my opinion it's bit of a more of an art. Market is doing what it is doing. Over a long run it remains rational. In the short run it can remain any variation, combination of rationality and irrationality, and to that extent markets may make you fail. You may be the brightest individual on earth, but you can be terrible investor if you are not able to deal with the machinations of market. So, absolutely true. I mean, discipline is what is vital. Patience is what is vital. Character, temperament, all are huge tools. Intellect is useful, but only that much.
Yeah, I remember two quotes after hearing your answer. One is, discipline is boring, but discipline is successful. At the end of the day, like if you are a disciplined person, then you are going to be like successful after a point in time. The second quote which I remember is, a market is more like a drunk man which can go sideways, left or right, and you can't predict after a point in time. So that is like another behavior or another quote which I think I resonate with.
Markets are time to time manic depressive, and at times punch drunk. You may get excited too much when it is punch drunk and it is seemingly in your favor. When it is manic depressive type, it could be brutally and wrongly so, even if what you are doing is right. But how not to lose your confidence and keep your head above the water and in the right direction, and how not to get overconfident when your things seemingly do well, is not easy to achieve, but most important to do.
Right. No, absolutely. Sir, like you have also invested in Infosys way back in the 1990s, and you invested in companies like APL, Apollo. So can you just talk us through the process of identifying these companies so early at a very good like valuation, and how did you come up with the entire thesis? You have always mentioned that quality is something that you focus more on, the management quality, etc. But what's your underlying thesis?
Quality for me, before I answer your first part of the question, quality for me is not a fetish. It's not a shibboleth. It's not some decorative part of dry philosophy. I think quality is a very real investing attribute. And you want quality not because it may sound nice to talk about it, or because it sounds intellectually gratifying or philosophically more pure. All of that it may be, but I think quality is for a very mundane reason. Quality is a very serious aspect of investing. Why so? A, quality is what allows a business to replicate itself for a durable length of time. And we all know two things being equal in all other aspects, but one which is more durable for a longer time has a greater value. I mean, it's purely mathematical. The quality allows challenges to be dealt with in a more resilient way. A quality business is not easily swept away by exigencies of the business, its environment, some sudden challenges that may come by, which invariably will come for every business, good or bad, over time. Therefore, quality allows that business to not succumb under, but to buckle up and fight against those challenges, and therefore come out more successful after the challenge is over. Poor quality may wither away in those situations. Quality management also is in a similar way.
Can you give an example of a company with a good quality or good management? Like if you can also give examples, that'll be very helpful.
So I'll take up both the examples that you named, and I'll try to explain that point. Quality management, again, it's not merely nice thing to say, but fundamentally attractive package of do fair things, say and do the fair things, govern it in a fair way, whereby interest of every side is judiciously protected and not only one. Have good idea about the future of that business, but at the same time terrific mind to keep working at each step in that long-term unfolding journey. And telltale sign of any good management eventually is in capital allocation, and how good those decisions are and what they have done over a period of time. Again, a quality management in general will make more appropriate such decisions rather than the bad ones. And capital allocation decisions at times can make or break a company, because capital allocation decisions typically tend to be large, prevalent over a long period of time, and the impact both on the financials and the character of the business can be significantly overpowering. Therefore, quality of management is again not a fetish. It is your insurance for long-term good of your business and protection of its value. Quality of business also is an insurance that you price that you pay for the long-term protection of your value. Bad businesses have too many challenges. At a particular point of time, markets may put it at an exalted, heavy-duty price. Doesn't mean those challenges wither away. It is just that at that point of time, markets disregard their weaknesses, but just put them on a pedestal, perhaps unreasonably. And it's easy to get carried away when that happens, because ultimately we all love money, we all want to make quick profits, and we all want to see bank balance going up. Therefore, anything which is seemingly helping you achieve that faster, more sizable ways, without doubt attractive. But it is only when, like Buffett says, when the tides recede, you know who is swimming naked. And therefore, none of that comes with a pre-warning when things fizzle out or melt down. Like in derivatives and options, you may make leverage positions and benefit from it 364 days of a year, but it takes only one day for all of it to be wiped out. And that one day doesn't come with any pre-warning. It just happens, and you just become a victim of it at that time, one more new victim of it. So I think quality is a very powerful idea which elongates life of a business, makes it richer, and therefore that greater quality improves the cash flows and the strength of the cash flows, and therefore mathematically it improves the value of the firm. The measurement may be qualitative, but the outcome is quantitative, and therefore often quality is considered as fuddy-duddy, just a fashionable thing at a point of time. And many times people say, now is the time for quality, now is the time for others. I mean, I've never understood this kind of thing. While market behaviorally, I understand, at times puts up bad businesses on pedestal and hugely. And typically bad businesses go up much faster in a particular period than good businesses ever do. But that may be idiosyncrasy of the market and behavioral pattern of the participants, but that doesn't make it right, and it will certainly not prevail over a period of time. Therefore, getting carried away by any of the distortions away from quality and to find too much virtue, we have to be very, very careful. It is always, of course, possible that something that you regard as inferior may actually turn out to be good. And that is a good lesson to learn in terms of judging, evaluating businesses better. But to say that bad businesses are to be bought knowingly that they are bad and yet hoping that it will still work for you, I think is a bit of an overstatement, and rather a dangerous overstatement to my mind. Therefore, quality is not a fad or a fetish or some kind of idiosyncratic shibboleth. I regard quality as a fundamental foundation for compounding the value of businesses, raising the value of businesses, making businesses more resilient during challenging time. And because you think all this is done by quality, it allows you confidence to be with it for a longer time, and be on a longer time with a good thing is what compounding is all about. And therefore, quality to my mind is all of this.
Can you give an example of a stock with a very good quality kind of a management, and how do you assess that?
Well, there are many, plenty of them over a period of time, but Bajaj Finance has been favorite for 15 years. 15 years back, Bajaj Finance had a market value of less than 3,000 crore, maybe some 2,500 crore. Today, probably the value is more like 440, 450,000 crores. So it has done decently well. It has grown well, and the value compounding is even greater than the growth of the earnings. Therefore, quality has clearly contributed to that extra. Normally, you would say parity of 1 for 1. So much is the growth and so much is the value compounding. But if you get extra, what you call as value accretive or P accretive, is how a lot of times in the markets define it, is nothing but the recognition of fact that how much more quality is contributed. Otherwise, logically, mathematically, market value is an outcome of the long-term compounding of the earnings. If it has compounded at X percentage, so is the return at X percentage over time. But if it is X plus Y, the Y is actually contributed by quality. And therefore, that is the mathematical proof of what quality does and what it achieves. It is not merely theoretical precept or merely fanciful theory and an idea, but not something in practice. Otherwise, scores of businesses valued seemingly in P terms at 40, 50, 60 times, but it is not their earnings are growing at 40, 50, 60 times. Their earnings are growing at a more modest 15, 17, 18, 20% or thereabouts. The extra pedestal keeping value comes from that quality part. Less seen, less easily tangible to put fingers on, far more difficult to believe in and stay confident, especially when winds are contrary. But that is the real thing. Quality is more real, in my opinion, than the numbers in terms of the growth or whatever are the numbers that you can compute. Because it can be computed, it sounds mathematical. What is mathematical sounds precise, and what is appearing as precise sounds true. While all of it has merits, But quality, simply because it is not so easy to compute or to define it in a pinpointed accuracy, doesn't mean it doesn't exist. It is merely that we need to learn better how to appreciate the market mechanism works, or the valuation mechanism really works in practice in the markets. So Bajaj Finance grew at a phenomenal pace in these 15 years to somewhere in the vicinity of 38-39% earnings growth, remarkable kind of a growth to sustain for such a length of time. Compounded value creation has been even higher. I have not looked at a precise number, but somewhere around, I think, 50% plus, a staggering thing to be achieved over a 15-year period.
So basically, like a lot of people also wanted to ask, like now there's an election season which is also happening. Do you think like this is the right time to invest in the stock markets? What are your views?
No, I'm not really paying attention to electoral calendar and the dates to decide whether to buy or not to buy. I don't think it has any impact on my decision making at all. As far as electoral likely outcome, my conjecture is one out of that of 140 crore people in the country. So it has no significance, it has no value to be attached. Whether what I believe who will win and who will not, and winning by who will imply vote, is something one can definitely make a more cogent analysis of. Who will win is a matter of one's own opinion, analysis. I also do analysis before making that opinion, but that political opinion is not useful to share in public fora, because it is that of 1 out of 140 crore. It's not my core competence or greatest ability. So no point in saying
Right.
who I believe and who will win
Yeah.
or not.
Yeah.
But suffice it to say, it is not a factor at all for me.
Got it.
I believe we are at a cusp of one of the greatest phases of value creation for this country. And it's not a short period of some 3-5 years, but more like 10, 15, 20 years of not only superior growth rate, but more predictable, more solid, more durable growth rate. Also superior character of the growth in form of better capital efficiency, better ROC, ROE, superior debt equity, and therefore conservative balance sheet, moats, competitive entry barrier being improved year after year. And all of that is packaged in the background of market valuation, which in my opinion are fair. I don't find them outrageous or shocking conscience. A lot of people time to time say that, but I suspect that opinion is more derived based on just the index level rising. But there is nothing mysterious about index level rising. If earnings rise, so do indices. Markets are expensive when markets are rising much faster than the earnings, which is not the case. Earnings are growing faster than the markets are rising. So where is the problem? There may be individual level some frothiness or some unreasonableness. That occurs in every situation. Whether there is too much of that, not really. And I would go ahead a step further and say, even in so-called mid caps and so-called small caps also, I do not find some shocking level of frothiness, which time to time people are very fond of narrating somewhere or the other that there is something going kaput and something is going to go blast out and die in ignominy. I see no signs of that. In general, even smaller businesses have improved in their character and capability. The entrepreneurship is getting spurred in this country. Smaller businesses are run by entrepreneurs, and they are at the cusp of it. as these businesses are rising and growing, I don't find that there is anything nefarious or unreasonableness about it. Startups are mostly those small businesses, variety. I'm sure many may fail, but I think enough will succeed. And they are a reservoir of entrepreneurship, innovation, new business models. Why cry about it and why castigate them? I see no reason. So, while it is a fact at a mathematical level, small caps as they are described are perhaps mathematically more expensive than mid caps, and mid caps are similarly mathematically more expensive than the large cap, which is not what you usually see. But whether there is anything unreasonable, grossness, shocking kind, or it repels your consciousness about what is happening, none of that. In my some 34, 35 years of investing, this is maybe sixth or seventh significant cycle. For whatever it is worth, whatever lessons learned, but always you learn new lessons. So I must make that preamble to that. But I don't find excesses. I find reasonableness. So we have seen foreigners selling left, right, and center for last several years. Their holding in a most happening market of the world have come down sharply. And in any other previous situation, your market would have gone kaput if foreigners were to sell the way they have done in recent time. But la behold, I mean, none of that has happened. In fact, markets have gotten stronger and stronger. It's almost as if retail and domestic investors are showing the thumb, or rather worse, to the foreigners as to you may do what you do, but we think markets deserve to be where they deserve to be. I've never seen that in the past. In my 34 years, I have not observed this. Foreigners not being very nice to you or kind to you, markets would cave in, no questions asked. It will be vulnerable and will look weak, and therefore those ugly phrases that if America sneezes, India gets pneumonia, I have always felt it is particularly ugly and disgusting phrase to use, but quite a few times it was a reality. So we can't walk away from that. I think we become more resilient. Therefore, I feel earnings will rise. They will rise at a superior rate. They will rise for an inexorable length of time. They will also do it in a more predictable way, more solid way. And that will happen along with the improving capital efficiency, greater balance sheet hygiene, and therefore lower financial risk. And markets are not particularly out of line, overvalued or undervalued. They are just fairly valued. I mean, 10-year, and not that I go by PEs of the market and indices, but PE of market today is lower than 10-year average. So there is nothing special about what we are today. So I'll say I'll shrug my shoulders.
Got it. How many books you would have read so far in your entire career? Do you remember the number? I won't be surprised if it's more than maybe...
More than 5 digits, for
More
sure.
than 5 digits?
Yeah.
My gosh, more than 10,000?
Yes, without doubt.
Oh my God.
Much more than that.
Oh, wow. I'm just surprised that I thought I was going to say 1,000.
No.
But 10,000, wow. That's
much
very,
more
very
than that.
interesting. Last question, sir. So this is a tricky one which I ask all my guests. If you were in the shoes of Kushal Lodha and if you were interviewing Mr. Bharat Shah, what is one question that you would like to ask him towards the end of the interview?
Well, perhaps purpose of life in my mind is happiness and fulfillment. To a lot of people, source of happiness can be various things. For some it could be clothes and appearance, it could be money for some, it could be glamour, it could be recognition, status given by the others, it could be pure pursuit of knowledge for some others. various sources of fulfillment and feeling contented and happy in the life could be there. For some, it could be friends and dear family, where there is emotional richness around you, and that can make you a very strong individual because you have benefit of emotional richness. To me, end purpose of life is happiness, and happiness comes from having no dissonance between what can make you feel fulfilled and what is it that you are occupied by. At some stage, I was occupied in studies. It did something for me. Many of those things may or may not be needed, but still, there were important things that did a lot of things for me. When I got into professional courses, similar sentiments. When I got into various workplaces, similar sentiments. There are things that you do that you like. There are things that you thought probably whether you need to do or not. Like in my current role, I do have to deal with the clients because it is an expected need of the client, because they will feel more comfortable and comforted by that access. So I don't have luxury of buffet where whatever may happen to Berkshire shareholder desire, they like, not like, they can sell, but it doesn't affect choices for Buffett what to do. He is in a great position. I am not at that luxurious space. Therefore, investing is what I love to do. But attending to clients, to their needs, and to do it in a fair, ethical way is my requirement of the work to do. So I have to fulfill that. The degree of order may vary, while both are important, but investing clearly is a joy. Also, many important joys in life. I collect art. I enjoy tremendously in that. Over a period of time, I've collected many works of art. I love reading. I love reading not for knowledge necessarily only, or insights, or benefit of that great understanding that the author may have. I read it purely because it's a joy. For me, reading is a very, the benefit is very pedestrian. It is joy simply. A good book, my chair, and I alone, hours gone, and it is such a spiritual joy for me that I feel fulfilled and very glad about the time I can spend. So, and having good people around you may not be an army, but just enough in your near and dear ones, in family and friends, which makes life worthy, desirous. So for me, many of these mixed together must continue to drive that happiness. That is important. And God has been kind, no complaints, and I remain grateful to many things and many situations and people who have made that or helped me in feeling that way or reaching that kind of milieu. So I would ask that question that don't deviate. Just be on the path that is work so far. Attractions and distractions in every path are many, but what you have figured out, what works in a long run and beautifully, is a path that you need to pursue
Right.
So remaining disciplined and not getting carried away, remaining true to the core lessons of the life, or what you have learnt and resides in the core dwelling place within. I think one has to keep continuing to burnish it, shine it, keep polishing it, and keep making it brighter.
Right. Wonderful
I hope
piece
I
of advice.
remain that way.
Wonderful piece of advice, sir. I love your humility and the grounded nature that you have. If I have to take like one insight from the entire episode, it has to be stay disciplined, stay like consistent, and you will achieve like whatever you want after a point in time. Thank you so much for doing this. I hope I could do justice to your time by asking some new questions, but thank you so much. I had an amazing time.
No, thank you, Kushal.